welcome back to a Monday market morning spice stream. I'm Tom Crown. Thanks for joining me. In this stream today, we're going to take a look at a bunch of stuff. We're going to start off with some Bitcoin ETF info, just some update recap. I know that sounds boring, but don't miss that. You're going to actually get some value out of it. It's going to be quick. We're going to look at our favorite Bitcoin metrics, like funding, open interest, etc. We're going to take a look at our charts here. Bitcoin, we're going to be looking for potential major supports and resistances. We have a really big metric on Bitcoin. You're probably tired of hearing of it, but we'll get into it quick here. We're going to look at the dollar as well. We have a few altcoin charts I want to get through. Ethereum, XRP, Cardano. Oh, something's playing in the background. Cardano. Did I say HBAR and HBAR? That's the secret one. There's also one at the end. If you stick with it, it's going to be worth catching. So thank you for joining us. Make sure you smash the like and subscribe button. Join us on Discord, discord.gg/TomCrown. Like, subscribes, hype, get it going. I'm not a morning person. I have been playing way too much Baldur's Gate, and it's time to get back to reality. I put in way too many hours this weekend. So kicking off the chart. No. The chart's here. First impressions. It's a new week. Bitcoin is at 29.3, and on the weekly time frame, there's a few things of just general note. One, last week did hit the 20 weekly moving average, or the Bollinger Band basis line, the white line here. It did close above, and typically we see strong moves come from both testing as support, holding as support, and holding as resistance. And we've seen this really through the history of Bitcoin. When the 20 weekly is lost, rejected, we tend to see moves to the downside, like in November, and the opposite is true, like in March when we hit 19.5. That was the 20 weekly, and early June as well. Although we did close below, we ended up popping back up. So holding here is solid. And a really quick take on the chart into this week is this. Our 20 weekly sits at 28.7. That's at the lower end, but maybe some of the metrics we're going to look at in just a little bit will help clarify that for us. Basically, closing above, staying above 28.7 is a bullish take and suggests a retest at the top of the bands, and that's at 31.5. We've been seeing an extreme amount of short liquidations nestled in that zone, and market makers are likely looking to sweep some liquidations. So we're going to get into some other stuff really quick. Then we're going to get back to the charts here. On the macro, stocks down a little bit here pre-market. Nothing too crazy, although they were up not even an hour ago. The dollar holding steady, and VIX is climbing. VIX climbing, not a great bullish sign typically for markets. Interesting take into the morning here. We have about an hour until markets go live, and so let's get through some goodies. So that's the next one. To rehash, we are going into September soon, and we have a large number of Bitcoin spot ETFs filed with the SEC. And as we can see, ARK21 shares just yesterday, I believe on the 13th of August, was delayed again. The note of importance: starting in September, we have a first deadline for 1, 2, 3, 4, 5, 6, 7 Bitcoin spot ETFs, their first deadline. That includes the iShares or BlackRock ETF that everyone's talking about. Early September is going to be very spicy. Now, if these are all rejected in one big swoop, that might sound a little frightening, a little uncomfortable. However, I wanted to pull this up. I thought this was great. I've been in crypto for so long that I don't think about these things. It's kind of just ingrained, and I don't always remember that you guys maybe haven't been around. Some of you definitely have longer than me, but some of you haven't been around. You don't have that same kind of historic ingrainment. So I'm going to try to move over, and this is our history of Bitcoin ETF rejections. And we can see that back in 2016 was Grayscale's first attempt at an ETF. We are now in 2023. That is 7 years later. So this market, retail or participants in this market, have spent 7 years seeing these declined. To have more declined or delayed or rejected, not really big. Now, back in 2021, when we started to see Invesco and Galaxy, Grayscale again, ARK shares and Wisdom Tree, those were a little bit more, I would say, spooky for a decline, as we hadn't really seen so many in the past. Into 23, we have now had many, more than I would say a dozen times, either delayed or rejected by the SEC, and I don't really think they're going to be big catalysts, even if they're all rejected at once. We might see a short-term downside to kick off September, but I don't think that that is going to be a deciding factor in 2023's rally so far. So just putting that out there. Of importance this week, our economic calendar. We have core retail sales and retail sales on Tuesday. On Wednesday, we have our FOMC meeting minutes, which actually have been pretty big over the last few months. Of course, we're going to cover those live on Wednesday. Streams already scheduled. We are the home of the chirpow of the FOMC meeting. We've been doing them for years, way before they were popular, and we made the trend. We made the trend. No one cared, but we did. On Friday, initial jobless claims and Philadelphia Fed manufacturing that's Thursday. Initial jobless claims, seeing those come in high would be good as well. We're seeing a lot of positive data towards the Fed, including just inflation numbers, CPI, core CPI, pushing towards perhaps no more interest rate hikes or just one more. Time will tell. And I got through that pretty easy. I like it. I like it. Let's move into our favorite Bitcoin metrics, and then we'll go to the charts. Dominance. There's some errors going on with dominance. I do want to give you guys a heads up here. You're going to see stuff like this today. There's something going on with TradingView. TradingView clearly miscalculated some kind of data here. If you look at total 3, which I should have brought up, I'm just not a morning person. I think it's coming from this chart. You can see that corresponding gap here. And whenever you see this on TradingView, especially for total or dominance, anything calculated, something that isn't directly traded, you can almost always just assume it's an error and it will get fixed. Don't freak out when you see these huge gaps on calculated charts. They're never real. They're never real. So I don't think this is real. I don't think dominance coming down is real, but that's going to be throwing off a lot of different calculations here because dominance fell over 1%, you know, in like one candle, it gapped down. That doesn't happen. That doesn't happen. Our favorite metrics: index up a little bit, gold up a little bit, balance on exchange negligible, crypto fear and greed still at 50 as it has been. Now it seems like since the dawn of time, all year really, we have seen about 50, a balanced fear and greed. Something Bitcoin's not super familiar with. Typically a lot more volatile, a lot heavier swings and emotions, etc. We haven't really been seeing that, and that does bring us to our special chart number 1. Special chart number 1. I know you guys have heard about this. I know it's like everything that every creator is talking about, and I can tell you why. Bitcoin volatility, Bitcoin volatility hit all-time lows literally yesterday. Yesterday, the day before. Over the last 2 days, it continuously hit new all-time lows, and it does look, at least for now, it has bottomed out at 0.23. Now, this is just a metric like the VIX. However, it describes Bitcoin's volatility, not stocks like the VIX does. Looking back at all of the data we have for this, we can see this is a new low by every measure. Every single measure. We hit a very low November 2018, and that was... I want to scare you, right at the time when we moved from 6K to 3K for the first time after hitting 20K in 2017, we did not break that low until very recently, actually. We broke that low basically at the start of January at the bottom, at essentially the reversal or the run up into 2023's rally. This was actually a big trading signal for us. When we saw this, we said, this is likely a reversal, even if it's not macro. Likely going to see at least like a short to mid-term reversal, and we did. Here we are again today, a new all-time low just 2 days ago, August 12th. And what does that mean? Is Bitcoin going to the moon or doom? Well, I wish I had the answer for you. I don't really, but we can do some speculating on that during the show. Just to put it into some context, this is right around that low volatility, the previous all-time low. Now right here, we're seeing that again. Previously, it was a reversal, so if that were to happen again, it would play out the same way. Probably be looking for downside price action. However, We do see this example basically back here in November when we fell from 6K to 3K when we saw the previous lowest volatility. And the reason everyone's talking about it is twofold. One, low volatility, I know it's boring, precedes really volatile moves. A 50% downside move in 2018. About 100% up move this year. These do really lead into these big moves. They get people not paying attention, checked out, and by the time they see the move, it's already too late to enter or exit, whatever the correspondence would be. Now, so this doesn't give us a clear up or down. It was pretty obvious, at least to me and some of the viewers on this channel, after a year of falling, seeing that all-time low in volatility was a really clean, like I said, short to midterm reversal because price really had only gone in one direction. We've only really gone in one direction this year, which is up. So bears, feel free to make that argument that it's going to be into a dump, but that's really anyone's guess. So the second fold reason everyone's talking about low volatility is because there's nothing else going on. It's the only thing. And not only is it the only thing, it is a historic first. It is the lowest reading ever. And that is the only reason you're hearing about it. If there was anything spicier, that would be what people were talking about. But they ain't got it. There we go. Close without saving. Dollar. Let's look at the dollar quick, because this is going to be, in my opinion, the big catalyst, at least in this week. So dollar has seen some strength off of new yearly lows, breaking 100 on the Dixie. We've seen a pretty strong bounce. However, it did get a little farther than we expected, testing 1017, which is where I was thinking for rejection, as support twice, and moving higher actually Friday and into today, 1035. This is really now, in my opinion, the line in the sand. If the dollar can break past July's high, it may move back up to 105, 106, or maybe even potentially all the way back to our retracement target that we kind of boy who cried wolf since February. We're looking for that dead cat bounce on the dollar. My hopes is that it gets stopped short at 1035 and we see that move down and into new yearly lows. This would benefit assets, equities like stocks and Bitcoin. Pretty much anything outside of the dollar would benefit and go up, at least in asset value. Watching that very closely, I would set an alert for 1035. Rejection there is going to be very clean and likely looking to at least retest 1017, but I think nail in the coffin here if it does reject there. I think nail in the coffin. So that is likely going to be a driver here in this, let's say in this week and into the end of this month. So back to the corn, and we're going to, look at actually one more interesting thing. So our Bollinger Bands do describe volatility in a different way, and as you would guess, Bollinger Bands on the weekly time frame are at the most tight. Most tight they've ever been, meaning the most squeezed, the most coiled, the most primed for a move. These are the only things going on here. The weekly is battling with bearish divergence. You're gonna have to see a very strong move to the upside, really in the next, I would say this week into next week. To eliminate that, you need to see RSI move very high and price move very high with it. As you can see, we have a lower high in RSI, a higher high in price. That's not a great setup. Not a great setup. Need to see price push in. So on the week, we were watching this as well last week. We see our TK has moved up, and so has price. And for me, this is the double dip. This is the double confirmation for me. This is right at the 20 weekly moving average. The difference here is like not even 1%. These are both pointing to us saying losing this level, which is like 28.7. Likely looking for downside price action. And if you ask the weekly, it could be as low as 25.7. That's not exactly my target, and I will show you mine, but that is kind of the lower range bound of what the weekly Ichi is showing us. So when we add some lines here, some of our horizontals, just looking at macro levels, they have not changed, and you'll probably notice I didn't put one on this chart, which is 27.2, but I won't even really talk about that one today. Really looking here at 29.2 and 28.4. 28.4 was tested 2 weeks ago, very clean hit. But as you can see on both of these consolidation phases so far this year, we've had a low and we've had a lower low, and that lower low has brought us to a higher high. It is a tongue twister. But the same happened in May, June, July here. We had lower lows that then, at the lowest point, bounced us up. That doesn't seem to be what's happening here, unfortunately. We could see something different. That's always possible, always the case. However, not the exact same thing. I would feel more comfortable had we had just rallied off of that low. I don't really like this chilling here. We did hit a higher high and a higher low on last week's weekly candle, which really does put focus on this week. Our yearly trend line, connecting our yearly lows, still intact here. Even if we go down to lower time frames, we can see a clean hit of it in June. And then we did have a clean hit last week on our, no, the week before. Yeah, last week. Close enough. Not quite as clean to that trend line. And now we're really just hovering above it. So in this week, we probably want to look at kind of just the weekly lows and highs here. This is going to be our defined trading range until proven otherwise. 29,050. I know it's so exact. We took some trades from that level last week. And really, we're actually above it now, but 29,250. Right in there, I expect to see the majority of trading for this week. Unless we get a mix-up and we get some kind of catalyst or maybe a squeeze of leverage in one direction or the other to really push us up. Resistance is very clear above us at 30.4 to 30.6K. Lots of liquidations there. We forgot to look at the liquidation map. Crap. And below, if we do lose kind of this weekly range, a retest of 28.4-ish in the cards. And that actually, maybe this disorganization will work out because that lines up really well with what we're seeing on liquidation. So this is the liquidation map showing us basically an estimated, by gathering data from exchanges, an estimated price level and amount of leverage positions that will liquidate at each price level. The current, or the arrow here, is the current price. Price moving down, this shows us how many longs will liquidate. Moving up shows us how many shorts will liquidate. We can see shorts do outnumber longs again, but it is not by much. It is not a huge margin. This was very different even a week ago. To the downside, and this lines up with what we're looking at on the charts here. The majority of long positions that have been opened in the last 7 days liquidate right around 28.4. Roughly 2.8 billion out of the 2.8 billion out of the 3.1 billion total longs in the last 7 days will liquidate by that 28.4 target, making it very attractive. This is very attractive to market makers. It is. This unfortunately does put us below a lot of these levels that we're going to feel more confident at, so that's going to be rough. And then to the upside, we see something very similar. All the way back up to about 30.4, 30.6, we have 3.1 billion out of 3.3 billion. A huge amount of money in a not very large price move. At 29.3 to 30.6, that is, in my head, I want to say is about 3 to 5%, something like that. Very small. Lots of money liquidating in either direction with very small price moves, and kind of where the apex of those liquidations are line up really well with our horizontals. Really wouldn't be surprising to see both hit. I don't know which will happen first, but to see both of these taken out, maybe return to a median and then pick a move, whether that's to move up or down. Very Bitcoin-esque. Maybe a very Bitcoin-esque move. So on the day, we do want to look at this on the daily here quick for Bitcoin. That 29,250 is our 618, our golden retracement using our Fibonacci retracement extension tool. We can see price is respecting it. Yesterday's sell-off or low candle close, still closing above 29,250. Today, wick below, but now trading back above pre-market, and we're going to hope that continues today. Today's range is probably 29.5 to 29,250, which is 1%. You might be able to say a little higher, 29.7. Basically taking August 8th and 9th's candle close there as your range high, and really either of these as your range low for the day. Zooming on in lower. Here's basically my theoretical trade for the day. I don't think we're going to be live to see this fill. Basically, along from 28 or 29,250. A stop is really up to the trader as always, but below 29,050, I think is a decent trade. I like this because I can bring the stop all the way down to August low and the TP all the way up to 30.4 30.4, 30.5, right in that range we're looking for, and you get it 2 to 1. It's not my favorite risk to reward, but it's a solid trade. You don't typically get something this clean. Any position opened right here, right now, I would expect to look to take profit at one of these two, whether it's a long or a short. I would look to take profit right at those liquidation levels and our horizontal supports and resistances. As I said, I really do think it's likely to play out something like this, where we see longs and shorts run, especially with this low volatility. Once they're swept, we can see that strong big move that everyone's been talking about. So that's what I'm looking for on Bitcoin. Nice. Really quick, last stream's TA, we were looking for a short from 29.9, did not fill. Price continues to kind of just sag lower here. And one little bonus that I almost forgot to bring up. One little bonus is there's some interestingness going on here. Where is it? With our lows. If I can't find it, I'll move on. I can't find it now in the 1 hour. Oh well. Is what it is. To the other charts. So let's start with HBAR, because people are really interested in HBAR all of a sudden, and the reason is this climb's looking pretty nice. HBAR had a very strong open in the year. If you guys remember, it almost traded to 10 cents. After that, it fell back down to about 4 cents, which is a 60% decline from February to June. And since June, it has begun to march back up, moving from 4 to 6.4 cents for about a 60% gain. And today's candle alone at 14%. So I do expect to hear people kind of asking about searching for HBAR. I'm going to set an alert. On HBAR, I would love to be super bullish. I am bullish on the short term, maybe short mid-term, basically looking for 7.3 cents. At this point, it is very hard for me to say I'm looking for really high targets on alts until we see Bitcoin make some kind of move out of this range. Basically just looking for our typical 618 retracement back to 7.3 cents. And this level lines up, I believe, with the week. Yes, your weekly close back in April and March, potentially acting as resistance. Lots of liquidity here. I do think that Hedera will see 7.3 cents sometime in the next, I would say in this month or September. However, that trudge up may look something like that. You may see another kind of resulting downward candle, as this march up has been very clean. I expect it to at least continue to 7.3 cents. And hell, if it really something changes and we see a big old mix in the market, say Bitcoin breaks to the upside, pretty reasonable targets here. Wow, that would be insanity. That would be insanity. All right. You would be looking for a retest of that 10-cent level from earlier in the year. And if you manage to get past that, you do have a higher low. So if price does move up there, likely see action play out like this. Could see 20 cents by the end of the year. That might be a little too bullish right now. As I said, this is just based on, say, Bitcoin starts breaking out of this. That would be to the upside. But 20 cents could be on HBAR's plate this year. That'd be pretty spicy. That'd be like a 3x. People are searching for Ethereum price prediction. And at this point, it seems silly to me to really make an Ethereum price prediction. If we look at the Ethereum BTC pair, it has been very weak, I'll say. This year it has been trending down. However, this is looking more and more like a falling wedge on Ethereum versus BTC. These pairs are going to become a lot more important to all of us trading once the market heats up again. I'm not going to get into the whole explanation of it now, but Ethereum and Bitcoin has been moving very sideways, and Bitcoin's moving very sideways, so I don't really expect it to diverge from Bitcoin too much in the short term. So its price predictions are likely just going to mirror that of Bitcoin's, which is not very defined right now. We do have a strong untested support at 1,772. I think I've talked about this in the stream, saying that'd be a great spot to look for a long, at least in my opinion. If it comes, likely looking to take profit like 1,900 for a 3 to 1. Perfect. This is all I can give you. If you want to be more aggressive, And of course, none of this is financial advice. These are all just my thoughts and how I might approach it for your educational benefit. Could be more aggressive at 1830-ish. Probably looking for a stop below 1800, but I think that's likely to get sniped out. That 1900 take profit, likely, the probability doesn't feel great to me on that. Doesn't feel great to me on that. Please don't freeze. Nice. Let's see. Bullish divergence there. Interesting. So I didn't notice this until now, and I actually kind of like this. I'm going to move this up. So I did not notice this on the day on Ethereum. Just looking at RSI, kind of interesting. We had bearish divergence on this large push in April. We had a low high on RSI, a higher high in price. However, unlike Bitcoin, Ethereum doesn't have that bearish divergence right now. Ethereum didn't push to a new high like Bitcoin did, and it has a lower RSI high. So it actually has no divergence here. And I think that weirdly might make a more bullish argument for Ethereum, that maybe that ETH-BTC pair will look to break to the upside. Not only does it not have that bearish divergence, it also has bullish divergence on these lows. We can see RSI hitting a lower low while price holds much higher. I didn't think I'd be saying that this morning. That's actually pretty spicy. I thought it was just going to be a boring Ethereum TA. Nice. Smash the likes if you like Ethereum. Smash the likes if you don't like Ethereum. We're going to look at Ripple. Ripple, XRPs. We've had the same thing going on, looking for 54 cents. Now, I was kind of sleeping on it in my feverish Baldur's Gate dreams. And I thought, hey, I'm missing a number. Where is that? It was 60. I know what the value is, but I want to know where I got it from. It's 61.8. There it is. 61.8. This was a really critical value we were looking at on the way up. It blasted through it. And yeah, that's kind of what I was not hoping for. So 61.8 is right here at this low. I'm still looking for this unless something changes down to that 55 cents. However, 61.8, I deleted it from my chart on the way up, I guess because it blasted through. It is possible. I'm not going to take this trade, but I think a long could be made from that 61.8. What, likely back to like 75 cents, looking for a lower high potentially. I'd feel much more comfortable in the 55 cent zone because that's such a strong support. Daily on market side for B. Lower high, money flows rolling over on the day. Finally, that's actually not too shabby. Still kind of cruising up. That's a nice doji close, man. For XRP on the week here, this might not look like anything to you, but if this chart was inverted and we saw these wick lows and then kind of these bubbling candles up into this doji, you'd expect a dump, wouldn't you? I would. Interesting. Keep an eye on XRP here into this week. That doji is really going to push this to make a decision, especially with the green close. That's spicy. Cardano. People are searching for Cardano, so I decided to look at it. There's not really that much to update on. However, for those of you who haven't been watching the stream for years and know all these charts we've gone over, that's okay. Lower low here on your candle wick. Higher low on RSI. You still have bullish divergence, but it doesn't really seem to be playing out. Or at least it doesn't seem to be in a hurry. July's wick high here, back to basically where it fell from, is really threatening. There's a lot of selling pressure coming in, and it pushed it back underneath this major previous support of 31.1. That's actually pretty spooky. 27.2. You filled that in. While I can't definitively give a good read on ADA, though, I can't definitively. What I can say with lots of confidence, if I was in an ADA long and I saw 26.1 taken out, I would likely not like to be in that long. Reason being is your weekly setup here was so clean. You had a sell-off that got bought up, you bullish engulfed, you moved higher. Then you got a little bearish up here. But what you did the next week, you filled in that market inefficiency. You filled in the fair value gap on the week. So you basically have on a weekly time frame, we'll say 3 tests of the same 26-1. If price comes back down below it, of course, there's always the chance. You always can, charts can do whatever. But losing that fair value gap fill is a very bearish sign for me. Now, I don't necessarily see that coming. Don't necessarily think that's happening. But if it does come, I think that is maybe time to pack that long up and recalculate. Because you might get a better entry. Who knows? Yeah, nothing too great there. 31.1, really, when you come back up to test it, which is looking likely, even if it does want to kind of break down below 26.1. Rejecting from there again would be very bad, and it might even present a shorting opportunity. Something like this. Yeah, I feel pretty good about that. This was very old. Yeah, I feel pretty good about that. All right. I want to look at SHIB quick because you guys have seen my SHIB posts. I have that trade open. Still open. Handled it like a champ. My long did... So here, this is some crap. My long did get stop lossed. So, almost every time that's happened, price has gone up. Take it as you want. But the SHIB trade, I have taken profits. I took profit actually on that move up, what, 2 days ago. You can see how easy it is. This is my favorite form of trading, and I highly recommend this to everyone. It's just layering orders. That way you get to kind of snipe any rally, take little pieces off the table. I think I closed about 15 to 20% of this position. And if you look down here, about $600 realized profit, roughly $1,700 unrealized, and right there you can see my additional take profits. There's the whole trade. These are you choose the trades. They're still open, a lot of them. Net long still. Ooh, we're talking about 29. We're talking about 29,050 earlier in the episode. We opened this quarter of a Bitcoin trade live at 29.5 as a limit order. Still open, still looking good. I actually really like that position still. Nice. Is there anything crazily running that we want to see or catch? Doesn't really look like it. Wait, white Bitcoin? I don't know. Roll Bitcoin. All right, so I don't know if I'd ever buy roll Bitcoin. That's a weird thing to say. I guess this is for that gambling site. Distribution's all right. I don't know if I've ever buy it, but it seems to be like always on the top gainers or losers. It seems very volatile in a market that's not very volatile. At the moment, I don't necessarily think that's a good thing. Hedera, the clear winner over the last 24 hours. Roll Bitcoin, the clear loser over the last 24 hours, sure. And THOR Rune, biggest 7-day gainer, and that's the random chart of the day that I promised if you stuck with it, you'd get it. So, biggest weekly gainer you can see has a solid monthly candle here, opened at 92 cents, now at $1.37, but I don't love this chart, and I don't believe it's primed for a long. I actually think it's primed for a short, even though it's the biggest weekly gainer. Even just looking at like a market order, even though we don't like market orders here. We don't like them here. Using last week's high as your stop, I think this is a pretty decent trade. I think a better trader can get an entry closer to 140, but for the sake of ease, I'll just leave it there. And everything lines up. Don't you love when everything lines up? Ta-da. 618 retracement right here at what? $1.08. Psychological level, beautiful. 618 retracement, beautiful. Previous resistance, beautiful. You broke it, beautiful. You're at resistance. This would be nice to see a move like that, and then you can likely target $1.76. Boom, 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 boom. Yeah, good luck. Don't chase green candles. It's bad for your health. Cass, really quick, Cass. We're looking for a long off the previous all-time high. This trade basically is exactly at the entry. I don't love it here. I don't love what we've seen since. Lower high, kind of retesting that. Watch out for this. Watch out for a third lower high on CAS. We did have bearish divergence up here. Don't really have that issue at the moment. Nah, actually really low RSI. Nice. Just, yeah, watch out for a lower high here and then a retest of 42 cents. If that happens, likely this trade is bunked. Likely we throw this one out. Then you have the flat bottom descending highs and you're looking for some kind of retracement, maybe back to 32, maybe deeper. Be careful. Be careful. On the other side, if it breaks 47 cents, doesn't put in a lower high, then yeehaw. Yeehaw. All right. All right. All right. Did I get through everything? Is that even possible? Might be possible. We didn't look at super chart. All right. Should have done this. Should have done this in the start or at the start. The super chart, just our favorite leverage tool. You get a coinglass.com or bybt.com. They're the same site. It's free. And you can go to Superchart and see this yourself. I'd like to just give a little read. Don't love what I'm seeing. Open interest dropped as price bottomed out about 12 hours ago and rallied back to where it started. Or open interest dropped. Don't love to see that. Funding, longs are still opening stronger than shorts. But total IO dropped. Not great. Not great. We want to see the opposite. That's not a very bullish short-term signal, and maybe wants to paint out something like that just based on IO. Likely you'd see a reverse of open interest, and maybe it can begin climbing back up. Nice. Nice. It's funny because open interest hit like a yearly high back here and then just shit the bed. Though in a larger perspective now, I see it this way. It hit a yearly high in open interest at this high. So that was actually the market going long. And as price has retraced and sold off from then, open interest has sold off as well, which typically we look for the opposite move because open interest is coming down, price is coming down. That is a sign, at least that perp traders are fading the move, aren't really into it. Spicy. All right. Well, it's 9:08. We got 22 minutes until the market opens. And wow, I'll be damned, Bitcoin isn't looking to come right on in here. Hopefully that open interest signal doesn't get us wrecked. That might be smarter than to do this. Maybe we'll go with this after all. That stops way too low down there though. Oh well, we'll figure it out later. Guys, make sure you've jumped in the Discord, liked and subscribed. I don't know if we had any new subscribers today. I didn't get any alerts. That's okay. You subscribed in spirit. Sign up with Fairdesk and Femex, links in the video description below. They are our sponsors. Forgot to shout them out earlier, though it does say sponsor in the bottom right. Use my link. It helps support the stream. Costs you nothing. You'll get some sweet sign-up bonuses for doing it. Don't lose nothing. It's win-win. Win-win-win, baby. Happy Monday. Happy trading, guys. Let's see what the week has to bring. Highly recommend you download Baldur's Gate 3 if you haven't yet. It's a great freaking game. You'll say goodbye to your friends and family for a while because it's going to absorb all your time. I need to go eat breakfast. I hope you guys have a great morning, a great Monday. I will catch you on the flippity flop. The flippity flop. You know what that is. You don't know what that is? That's okay. Love you guys. Crown out.